Hello, this is David DT, Trading-to-Win.com. I will be talking about US dollar, Nasdaq Composite, and S&P 500. Show me the money. We're looking at /DX USD dollar index futures, and as you can see right here, it's March 9th week, and as you all know, this is when market bottomed right on TD set up sell signal, and it went down, and right now it is very close to corresponding TD sell setup. TD is still line 77.85. It attempted to touch it once, it's getting close to that again, but the main point of this weekly chart is to show you that market bottom is precisely in relation with TD sell signal, and one of the very few traditional oscillator with A I'm using is RSI Wilder, but slightly modified. As you can see, that red line is 38, this is 62, this is traditional 75, and this is 25. What it shows me is that dollar is still in a long-term bull market. It was in a bull territory between 62 and 75. It is in no man's land right now, but it never crossed bear market territory. It attempted once and bounced strongly right here, and it is right now very close to retesting it again second time. And if it's going to hold, US dollar is going to rebound very strongly. Now let's go to the daily chart. What we can see on the daily chart is this pretty much the same story with RSI Wilder. Of course, it did dip into bear market territory, but promptly went up and is still in neutral territory. It's kind of consolidating in descending triangle right now. The velocity sequential can down buy right here. Buy setup started and is about to complete. And if you watch closely, it's going to complete very close to Fibonacci time series, and that would imply that a very strong move will come, and judging by setup, it's obviously going to be up. Again, as you can see, no 38 been penetrated, not even got close and pullback. So in about 1 or 2 days, probably Monday, most likely Tuesday, after hopefully perfecting buy signal, the US dollar is going to move up. And no matter what some other people say, it's all about dollars, stupid. Market will act correspondingly. Right now, market is behaving very weird, and it's very difficult to find corresponding pressure points. Everyone is confused. Bulls are happy, bears not happy, then vice versa. But I think it's all about US dollar, and US dollar is bottoming and about to move up very strongly once again. Let's go to Nasdaq Composite. This is a weekly chart of Nasdaq Composite, not Nasdaq 100, don't confuse it. This is the bottom in 2002. Fibonacci retracements of the bottom in 2002 and top in 2007. As you can see right now, it's very close to 50% mark right here. Also, gap is going to be closed. If we're going to look at TD Wave Daily, we will have target somewhere here, 2250. But this is just imagination for now. But I would say that Nasdaq is in its own small private bull market. Then again, it's about at 38% retrace from the bottom that present resistance. I think it's going to oscillate somewhere between 38 of top 2007 and bottom in March, and 50% retraced of the bottom in 2002. So this is the area to watch. Obviously it has broke out. This is a gap, no resistance. I don't know how correct this data is, but then again, that's about going to be between 1960 and 1860. Pretty steep range, 100 points, but we can deal with that for now. It has attempted to go to bull market territory once, sold off. It's preparing to do it again. It's still not even completely close. As you can see, there is a gap right here. So next 2 days are going to be very critical to find out what's going on. A lot of bearish blogs, bearish or bullish blogs declared bear market over. It's in the next stage of bull market. It's quite possible, but I think they are slightly premature. Next few days are going to be critical. This is daily chart, Nasdaq Composite. As you can see, it did cross 62. At the same time, sell setup is in progress with possible completion on Wednesday, Thursday. So again, next week. S&P 500 index. I'm going to talk about RSI, then I'm going to remove it to free up the space. As you can see, it has not even gotten close to bullish confirmation. It's obvious due to financials sold off so hard and so on. Let's get out of here. Oh, one thing to mention, as you can see right here, it's still negatively divergent. Is it? No, probably nothing to pay attention to. Okay, now I have to point at my prior mistake. I had to adjust this channel because I drew it over the extreme lines and not quite precisely, but normally I will do it over the closest, highest closest for the top line. So as you can see, I was making a lot of videos based on presumption that S&P just recently crossed that channel, and in fact it crossed it before. It's actually consolidated right at the line of this channel, and now it's moving up. Let's magnify it a little. Speaking of D wave, as you can see, that was W1 down, W2 up, and retrace of W2 up was the most confusing out of every single possible 50%. Ideally it should be 61, and then it's very easy to calculate wave 4 where we are right now, but it was 50, so we have to deal with that right now. Let's magnify it a little bit. Alright, once again, S&P 500 weekly. This is 61% retrace of Fibonacci drawn of 2007 highs to 2009 March lows. As you can see, it's right here, very close to where S&P right now, and it presents resistance. And also, as you can see, right here is 38% of D wave, W for one of the possible retracements. This is 62% if it's not going to stop at 38. But it stopped at 38, and I would presume I could draw Fibonacci from here to here. And if I would do that, presuming this is temporary top, TD magnet line close of reference high is right here at 946.21. As you can see, prior week, despite of a very strong move up, has not crossed it. It did, I believe, touch it. Well, no, yes, it did. No, it did not touch it, 946, and here high 943.96, so it did not even touch TD magnet, and prices tend to stick to TD magnet for a while.